I do not want to go over. I yield.
Thank you, Senator Test. Senator Vance of Ohio is recognized.
Thank you, Mr. Chairman. Thanks to you and the ranking member. I think it's important just to sort of note that this entire conversation about late fees, overdraft fees, and so forth takes place in the context of extraordinarily high interest rates. I'm 39 years old. Pretty much the worst interest rate environment since I was a toddler. And I mercifully don't remember anything about interest rates when I was 3 years old. So I think we have to sort of be careful here about this particular proposal, or at the very least appreciate some of its implications. And Ms. Madry, I wanted to sort of direct this first question with you. You obviously run a small bank, and I appreciate you being here, or I should say small credit union, right?
Right.
Maybe you could just sort of explain how, especially in the context of higher interest rates, what this particular proposal would mean for your ability to offer debt and credit services to sort of people, especially low-income people.
So in the context of my credit union, first off, we're capped at 18% interest rates.
Yeah.
And we really try very hard to keep our interest rates very low. I'm in a market where it is overbanked and underserved. And so I have extreme market pressures to have low rates in order to attract borrowers. And we also, as a credit union, we believe in giving profits back to our members.
Sure.
So liquidity is tight. So I am paying higher rates on my members' deposits because we, as a credit union, I am reliant upon the deposits that my members make to provide the liquidity that I need to lend out. So while the interest rates have climbed, my members have not felt much of that pinch. Again, I serve a low-income population, and it is important to me to make sure that financial services are affordable to my members. The fee income really helps to offset the operating costs that goes along with collecting on overdraft when a member draws their account. We have to send out letters. My staff is there calling members. It helps when members are coming in because their account is overdrawn because of a circumstance or a life event. As I said, my staff will take the time to talk to the member, understand the situation, and help them to find a solution. I can tell you that the way we operate in our credit union is if a member's account is overdrawn, we will do everything that we can to help them to get back in good standing. We waive fees whenever possible. If a member comes in and asks, we have other alternatives that we make available to members. However, when you're serving a population that is vulnerable, quite often they don't want loan products. They feel more comfortable with this service because it prevents them propelling into perpetual debt.
Sure. So I appreciate that, Ms. Madarina. I want to pick up on that basic point, Mr. Rust. And I know you're an advocate of this proposal, and I want to just understand this basic question. I mean, do you think that consumers, especially lower-income consumers, will have less access to credit if this proposal becomes law, the junk fee proposal?
And do you mean specifically the credit card late fee rule?
Yes.
So thank you for the question. I personally think that credit cards are among the most profitable sources of business for institutions. And the Y14 data from the Federal Reserve talks about returns on assets that are 3 to 4 times greater than other forms of commercial banking. There's examples of institutions with profit margins of over 40% on their credit card business. So in my view, this isn't a question of will credit cards be exorbitantly profitable or just incredibly profitable.
So I understand that, and I don't necessarily disagree with the underlying argument, Mr. Russ. I guess my point is, look, when you take a product that's, even if I assume sort of your framing is correct and say it's very profitable to sort of moderately profitable, if you make something more expensive, if you take it from very profitable to just somewhat profitable, don't you fundamentally make it less likely that people are going to offer those services? And my point here is not to put you in a tough spot. I guess my argument is I think it would be better if we were just honest about the debate we were actually having. This proposal will inevitably lead to less credit options for lower income people. And I wish its advocates would just lean into that and say, yeah, that's exactly what it's going to do. In fact, we think that's a good thing, as opposed to sort of hiding from the fact that it will mean less consumer credit for low-income people. And I guess a related point is if the goal here is to provide options and to reduce the debt spiral that we all know people in low-income situations sometimes experience, I maybe wish we just tried to deal with that problem directly, as opposed to the sort of backdoor way of making credit more expensive and consequently less available to people. So I just wish this whole debate was a little bit more honest about what we're really doing. What we're proposing to do is to make consumer debt much less available to low-income people. Let's just be honest about that, and then have the debate about whether that's good or bad or could be accomplished through other means. That's sort of my point here. With that, Mr. Chairman, I'll stop. Thank you.
Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Ample research